out in Asia in particular, which certainly did come to some better market picture as well then throughout the early part of this morning. On the local front, of course, the big question marks will be where to from here. Is it indeed risk on is perhaps the big question that the markets will be asking themselves. We certainly don't know. And the Rand as well has certainly done a little bit better off as we head to that market picture as we get towards the close of the day. Europe as well in some sort of positive territory as well for the time being in this afternoon trade. But very quickly, though, let's chat to Michael Traherne from Vestact Asset Management as we unpack the market picture just a little bit more. Michael, thank you so much for the time. The interesting thing here is that we keep on getting these upward, downward sort of movements in the market. One day it seems like we're really going to get going, and then the other day it just doesn't seem to be the same case. But for now, though, we're still at record highs, especially out in the United States. What's causing that?
Yeah, Arabile, the big thing is investors are still optimistic about a fairly quick recovery to global markets. Scientists are finding better ways to deal with the COVID-19, better ways of treating people. The result is that you get lower mortality rates, and as your mortality rates come down, more and more people are willing to go outside and continue spending. So that's on the one side. On the other side, investors are looking at all the government stimulus, particularly from central banks as well, and they're saying that's what's going to tide over markets for the next year while we still struggle. Unfortunately, in South Africa, we don't have the balance sheets that some of the international counterparts do. And this afternoon is when we find out how much firepower South Africa really has to fight and keep the economy going for the next couple of months, until the private sector can lift itself up again.
How much of the interview you heard with Isaac Mashego really with regards to expectations there? The zero-basing budget is quite a difficult element to get to, especially for a country that has its losses when it comes to the budget deficit in particular. Do you think we get to a point where the budget gains us some sort of credibility?
Yeah, I think it's more about implementation. Our politicians over the years have been very good at talking a good game. What the market wants to see now is implementation. The big thing that we're going to be looking out for this afternoon is, one, what is our forecast tax shortfall? Two, how much extra are we going to be spending? And effectively, what is our budget deficit over the next couple of years? It'll also be interesting to see what's said about SOEs and potential bailouts and funding for them. That sets a precedent and sets the tone for the budget. How serious is government about reducing this budget deficit, and how serious are they at making their systems and their SOEs more efficient that they can then serve the public? So those will be some of the main things to look out for. Given how volatile things have been at the moment, personally, there's no real expectations on the numbers. Even I think from Treasury's perspective, these will be guesstimates at best. We'll actually have to see what he says next year, February, in terms of where everything lands and settles.
So one thing is, as you said, commitment is going to be quite key and critical. Can we get back to some sort of stance that we had before COVID-19?
Yeah, I would say before COVID-19, we were already on a shaky stance. We were just short of being downgraded to debt, if not already on the way. We were already in a recession. We already had budget deficit problems. We already had SOEs that were failing. So all that COVID has done is to speed up all of these things. What we need to do is get back to a point where we've got an efficient government, a government that's spending money efficiently and on the people and in the right places. South Africans are tough people in general, so you have to back us to get back to where we need to be. And if you have a look at our history, this is not the first time we've been in junk status. You would have to say that economically we've probably been in a lot worse positions, particularly if you go back to the late 80s. South Africa was probably in a worse position than we are now. We've got a talented people, so I think you have to back South Africa to get back to where we need to be, but it's probably not going to be as quick as everyone's hoping it will be.
Yeah, certainly will be the case. All right, that inflation number comes out 3%, the lowest since 2005. What do you read into that number?
Yeah, the optimist in me says we get more interest rate cuts coming in the rest of the year. It's the last cut, the market was pricing in about a 50-50 chance of another 25 basis points in the rest of the year. That looks a bit more likely now. It is worth pointing out, though, that Stats SA said due to the lockdowns, it was very difficult to get all the information that they usually get. And roughly a quarter of the basket was estimated numbers instead of actual numbers. So it could be a case that the number is smaller than it should be. But it generally shows that, a drop in petrol prices definitely assisted in keeping inflation low and people aren't spending. And if people aren't spending, it's a good reason for the Reserve Bank to reduce the interest rates further. So let's see what our governor has to say at the next MPC meeting.
Lower than the already record lows it's at. We'll see how things fare. July is the next meeting, of course, for the Monetary Policy Committee there. Michael Traherne, appreciate the time. Thank you so much for joining us here on Point there. And he's from Vestact Asset Management there, helping us unpack that market picture. Let's get back.